Today we're talking about Corsair Gaming stock, a company that I've already made a video on, and a Jeremy Lefebvre stock that he advertised very much before. Now he doesn't do it as much. I'm not gonna lie, he was the one who brought it to my attention, and the company is down a lot from its all-time high. Let's check it on this Google chart, and it is down 67.453%. A very sad downtrend. I'm gonna be honest, the company is a red machine. What happened was, even when the stock market was up, green, the whole stock market was green, Corsair was down. People might blame it on Eagle Tree dumping the stock or other hedge funds doing the same thing, but I'm gonna be honest, the company does have its fair share of issues such as inflation, future inflation, fuel prices, and recession risk. Also, the company's quarterly report revenue was down 28% year over year in the last quarterly earnings, and that's really unfortunate. Even if you are unaware of what Corsair does, it sells gaming equipment for aspiring pro gamers and or even for regular gamers who enjoy the finest equipment, as you can see here: cases, keyboards, headset, monitors. I'm not a Corsair gaming product user. The only product I have is this Elgato mic that I'm currently using. I cannot deny it. The quality of these products is very good. And one thing I like about my companies is if they have good quality product, because they get free marketing from people telling their friends, family members about the product. And this is one of the most healthiest way a company can grow, is from this word to mouth marketing. Anyhow, welcome to the BNB. Today we will be reviewing the reasons why CRSR is down and what might help it to go up and stay up for a long time, or is it going to stay down for a much more longer time? Should you consider buying this stock right now? You should make an informed decision on the stock and the company similar to which, maybe such as Logitech. I will not put Tencent in the same category because this is they like actually make games. But remember, the audience for both of these companies is similar, not the same, because gamers would like to buy games, but not all of them would buy the best equipment. Such as myself, I'm not the kind of guy. I might probably buy a game, but I'm not gonna buy the best equipment to play that game. To be honest, maybe a gaming chair would be nice one day, but right now I haven't even considered it. Corsair does sell gaming chairs. If I'm gonna buy a gaming chair, it's gonna be from Corsair. Probably gonna be a bit expensive. Let's be honest with them. It's like $700-$600, but so just remember, they have similar audiences, but Tencent has a wider reach and they're worldwide, while Corsair, I'm not sure, are available in the whole world. Maybe not, but Tencent, obviously, it's a software, it's much easier to distribute it. This time, before diving into the financial numbers like I did with Beyond Meat, if you should go check out that video, I will have to explain the fundamental reasons why Corsair Gaming, or CRSR, investors are pulling their money or evading the stock. Firstly, high inflation, like with Beyond Meat, is decreasing demand for a company and for the business, because for a business model that revolves around hobby for most of the population. So when the grocery bills get higher, a regular person is not going to consider buying a $100 headset. As you can see here, I was checking the prices for this thing. Yeah, so $300 headsets, $300 chairs, or $3,000 PC. They're gonna probably focus on not buying these products. They will probably consider buying their groceries, what is necessary for them, and unfortunately, that will cut down their budget for buying grocery products. So that's one reason why investors are evading the stock. Also, right now is a real bad time for CRSR stock, especially if company keeps reporting bad numbers. People are going to assume that a recession is coming. And if people believe a recession is coming, they're going to try to evade these growth stock. Even though Corsair Gaming was a profitable company, right now people are considering it as a growth company and not a dividend company, because they first of all, don't offer a dividend, and at the same time, they're not a company with the best cash flow. There's other way better companies with cash flow, such as maybe Apple, Microsoft, and you see these companies are pretty stable. They haven't fell as much as all these growth companies that I've been mentioning previously. Also, recession risk might cause a lot of job losses, and when people don't have jobs, they cannot buy these expensive products. Now, financials, if we look at the financials, here they are, I'm sure, yeah. Okay, so this is from Google. I'm not gonna go into the deep dive. It is much better for you guys just to understand the service level. If you want to do deep dive, you can just write it in the comments below. The company's revenue down 28%, which I've mentioned previously, and it's really unfortunate because, and then also net income down. I I said this because a profitable company, but right now you're seeing a negative net income, only 2.87 million, which is not that bad actually, but it's down from like 106% from its previous net income year over year, and their EPS took a dive similar to the net income, like I've mentioned, and the net profit margins are down. So they're because they're not profiting. Obviously, the profit margins would be down. That makes sense, and as you can see, this isn't an ideal situation for a company that used to be profitable. So the 67% downtrend in the chart in the stock price is expected, or it makes sense, right? It's not from nowhere that this drop came from. In the previous video, my main issue with Corsair stock was their debt, their long-term debt. But something they've done exceptionally is, and I want to congratulate the management for doing that, is reducing the long-term debt over time. As you can see here, it was 370 million, and now it's down to 240 million. So it's 0.24 billion dollar, makes sense, and which led to shareholders' equity increasing over time, and that is exceptionally good, which led to debt to equity ratio decreasing, and these are good things, and I want to congratulate the management for doing that. My personal investment strategy for this stock would be to buy more and more until my cash is depleted. Yes, I will buy more of this stock, and I will buy this over Beyond Meat because the risk reward is the same, almost the same, not much different from Beyond Meat. So Beyond Meat, I can expect it to triple maybe in 2-3 years if the management does exceptionally well. And Beyond Meat is in a worse position than Corsair stock at this current moment. But Corsair can triple easily from 15 to 45. It's an all-time high if the company starts executing and the inflation tends to go down, and the Fed stops increasing interest rate. That will lead to this stock going up and up if the execution of this company has been done. It gets better and better, and it will, because I actually believe in this management. They've done exceptionally well for the past year, got this company to profitable level in the pandemic, obviously, but they can keep going hard and strong. I really do believe in this management, and that's why I personally would believe this stock will go higher than the Eiffel Tower, but not maybe not the CN Tower, because I live in Canada and I know how big the CN Tower is. It's actually not that big. When you go up close, it doesn't look that big. But to be honest, we gonna move mad. This stock is my personal favorite, or one of my personal favorites. I have more stocks coming in that are much similar to this one, and they're not in the same space. I have Penn National Gaming coming up. I really do believe in the gaming industry, and that's a different kind of gaming, obviously. So recommend watch all those other videos and subscribe to this channel.